Good evening, this is Jack from Charting the Markets, and this is the Bigger Picture webinar for the evening of Sunday, the 15th of March. My disclaimer, I do this for educational purposes only. I'm here to share my technical analysis with you. I hope you can take some of what I'm doing and learn from it, transfer it to your own charts. I'm not here to issue trading signals. This is a video for paying subscribers at CTM The Bigger Picture, substack.com. It's published on YouTube after a delay of a week. All right, great. Let's have a look at the charts. The market has already opened. We're up. And we're seeing a bit of a rally after the slide down on Friday. We're still on a weak 60-minute bicycle as we were on Friday morning on ES and on NQ and a YM. None of them have failed. They're all still outstanding, and they may well still all make target. So I'm thinking we might see a bit of a rally here. I've got more to say about that on the bigger picture charts, but I would say that we do have, we haven't quite made new lows yet, and I'm thinking there's a pretty good chance we're going to, subject to the news and the fairly disastrous looking Iran war as it progresses. But at the moment, I'm thinking we might well see a rally short term. We've got, obviously, the weak buy signals. We don't have one of those on RTY. We, again, don't have one on DAX, but still, this still looks like a potential bull flag here. ESDX still looks like a potential bull flag. Nikkei, which I urgently need to upgrade to June, as it appears. Sorry, I've only just introduced this, so I haven't got a feeling of how this, when this expires, but it actually expires earlier than any of the others. Because it's already ended, so I'll have to redo this tomorrow morning. But in the meantime, we have what looks an awful lot like a bull flag here too. So we will see how that goes. Let's have a look at the bigger picture charts. Okay. Now, I'm still looking at the ES March chart here, and that's because, one, it'll be trading for another few days, and two, because this is the data I've got so far on the ES June chart. And I'm hoping that over the next week it might find the previous 6 months of data that it very, very much should and does have, but isn't showing up on the stock charts at the moment. But you can see on the bigger picture, we've got a nice looking double top here. We're pretty close to breaking down from that. And we have made it down well below the 30 level on the RSI 5, but don't have any positive divergence here. All right, the main thing I wanted to show you here on the equity charts is this. This is my SPX ADP charts, and this is basically irrelevant most of the time because it's only really interesting when you reach the 30 level or the 7 or the 30 level or the minus 25 level. So if you reach one of these areas, then you are looking at an area where you are likely to see SPX ADP turn back up, and generally speaking, that will involve a turn up in price, although not always. But you can see over the last few months we've been, trickling around in the middle here, and that's mainly because really the market was still technically making new highs, but it really wasn't making them by much. NDX and SPX have really just flatlined since last October, November. Made a couple of new highs, but not really done much. This is the first really significant move that we've seen in a few months, and we've now reached the bottom line here. This is a warning that we may well see a move up here. That doesn't mean it's the end of a move. You can see we reached one here. Now, that was a low. We did see a decent rally here, but it wasn't huge. But that was, that's still like 160 points or something. And we've seen another one here. Again, we actually had a bit of positive divergence here when we went a little lower, which is pretty unusual and not something I usually look for. But again, that was at a significant low. We've seen near misses here, which were at significant lows. This is something to be wary of. I'm wondering whether this is a signal that we're going to be seeing a strong rally soon. All right, let's have a look at the bands and where we're standing there. One reason I'm also thinking that we might see a strong rally, we're now broadening out the bands here, and what I was saying on the bands was that generally speaking, on a move, unless the news is dire, you will get some. You will have some movement, allowing the bands to expand until before the main move starts, and this band expansion is what we're looking at here. But we're still obviously very close. to the daily lower band, 3SD lower band. I don't think we reached that on Friday. That closed the day on at 65.98, and we got down as low as 66.23. So we're still short of it, but it's still uncomfortably close. We could use a rally to create some distance from that. In terms of the hourly chart, we have an RSI5 buy signal brewing, but it's not a particularly well-formed one. Nothing really on the 15-minute charts, but I've got a feeling we might see a rally here, and we'll see whether we do. Could this be a double bottom on SPX? Possibly, if we get some really good news from the war, but I'm not really expecting to see that. In terms of the Qs, again, wondering about a rally here. Again, we don't really have any support for that worth a mention on the hourly chart or 15-minute chart, but I am wondering about it. And the SPX ADP chart, that's a significant warning signal, which is why normally that's never relevant, and I rarely mention it. But when it reaches the top or the bottom line, then at that point, it is worth keeping an eye on. Okay, Dyer has been got actually down and retested this low here, potential double bottom here, although I don't think that it is one. But again, I'm wondering about a rally. Bands are opening up nicely. The one where it's not opening up nicely yet is the Qs, and that's because the Qs actually have been relatively muted in the moves here, so they've only just started to expand. But we will see. All right, let's have a look at IWM. IWM didn't retest the low, steered, was holding up better than SPX or Dyer, not that close to the 3SD lower band, and the bands are opening up nicely. Wondering about a rally here. Can this go an awful lot lower? Yes. And this is one thing I want to say about this this crisis that we've got with the Iran thing. Now, I don't think this is too well thought out, and frankly, some of the reports we were getting about the officers, army officers talking about revelations, and this was a war which would bring forward the end of days. To be honest, most of the American allies are not too keen on the end of days happening anytime soon. And if they wanted to be dealing with a bunch of, if they wanted to be pursuing the agenda of a bunch of religious fanatics, they could always pick the Iranian one. So it's uncomfortable. I'm not sure. I'm belatedly, as the Iran war is not going well. Trump's looking around for allies, but to be honest, he spent most of the last year being a terrible ally to all of them. They made it very clear that the Ukraine war was Europe's war and not any of the US's business. I don't see why the Europeans won't say exactly the same about Iran. And you might say, oh, well, oil concerns all of us. But yes, but it concerns, in all honesty, Iran's made it pretty clear that anyone who's not supporting the US can have their oil come through the Strait of Hormuz. And to be honest, they don't actually get a lot of their oil from the Strait of Hormuz. Most of that goes to Asia. So I'm skeptical as to whether any of the Europeans will help. I don't think so. And honestly, given the number of times that Trump said, oh, well, if one of the NATO members was attacked, I've no idea whether we'd come to their aid. I mean, in effect, the NATO alliance is shut down and just, in stasis, waiting to see if the next president is more positive about it than the current one. So there's no reason really why any of the European allies would come to the aid of the US here, and I'm not really expecting them to. And a number of them have already said they won't. That doesn't include, there's not a firm no from Germany or the UK yet, but we've already had firm no's from a number of the others. And given that Trump's obviously been threatening two of the NATO allies, who are Canada and Denmark, well, I don't think he's built up a store of goodwill over the last year. This means that the war could actually extend for quite a while. It could get worse. We could see more trouble on oil depending on what goes. The best case scenario for the oil price is actually the Persian Gulf states all make separate pieces with Iran and kick out all the US bases. I think that's a very real possibility because I really don't think any of the Persian Gulf states are looking at anything like this as being anything they signed up for. I mean, really, they were making nice and giving Trump planes and all this sort of stuff because they thought they would get protection. This isn't protection. We'll see how this develops, but I think this crisis could be a long way from being resolved. I think Trump would like to tackle here, but I think he really needs agreement of the Iranians to do that. Otherwise, if he declares victory and goes away and they continue attacking the Persian Gulf states, then, well, and the Strait of Hormuz is closed, then it's not really going to convince anyone that it was actually a victory. Okay, anyway, so what I'm saying is this could get worse and we could see a really serious decline from this. If we do see a really serious decline from this, we could see the biggest crisis since 2020. And I will be watching out for that. I'm not convinced that's going to happen. Obviously, the news could get better. It might be, for instance, I mean, one of the things I was talking about on my post last week, the second one I've done on the bigger picture on the oil, was that if the US were to take Carg Island, and if that mattered to the Iranians, obviously it would cut off their oil, but at the moment they're cut off their oil exports. Actually, I think they may have gone up because they've been selling plenty to China. But the fact is, I think they're they're settling in and they're making noises as though, frankly, they're just mainly interested in winning this and don't really care about the money at all. And honestly, I think that might be the truth. If that is the truth, then taking Carg Island isn't going to make any difference apart from to piss them off. So other options are Persian Gulf states dump the US. I think that's a very real option. The other option is this might just drag on for a while. So we will see. But it may be that if the US take Carg Island, and it does look as though a load of Marines are being pulled up, and that might be a possibility, it could force the Iranians to the table. So, but under the current leadership, I don't think that's going to be an easy thing to do. All right, so in terms of IWM, in the short term, I'm wondering about a rally here too. In terms of DAX, I've got to say I'm looking at this daily RSI 5 buy signal that's fixed, and we've got another one on Nikkei, and I'm wondering about a rally here. And on the on all of DAX, ESTX, and Nikkei, it's looking like a bull flag here from this low. So, and I'm wondering whether that's flag is going to deliver a retest of this rally high. So we shall see. All right, great. Let's have a look at the DX and the currencies. Okay, DX has gone higher here, and I really want to talk about, and actually since I captured this chart earlier, this sell signal is fixed. So I am thinking about a bit of a pullback here. We've got supporting signals on a lot of the others. USD. Since I capped this earlier, I put this in as a buy signal was brewing. That's now fixed. GBP USD had a buy signal brewing. That's now fixed. Australian dollar had a buy signal brewing. That's now fixed. NZ USD had a buy signal brewing. That's now fixed. And USD CAD had a possible sell signal. No, that has a sell signal fixed already. The only one which doesn't have a sell signal, I think, is the yen. So 5 out of 6 are supporting this sell signal on US dollar. That's generally a pretty good sign that we're going to see a bit of a pullback. But on the bigger picture, this could go an awful lot higher. So let's have a look at that. All right. Okay, now this has been an unusual, this crisis, now normally in a crisis like the one we're seeing here with the Iran war, oil's obviously up because, it's an oil states thing. But normally we'd be seeing precious metals and bonds going up, and we've not really been seeing that, apart from on basically the first couple of days. But what is happening here is we're seeing the dollar going up, and this actually has interesting implications, and I know I've said it before, but this big bull flag here is a really nice pattern. And when we've got a pattern like that, even if the US government is doing nothing to do anything which might send the dollar up, that would really support the dollar. Nonetheless, I will always, until we see a clear failure of the pattern, I'll be looking for the pattern to likely work, because 70% of the time these will work. And these are nice patterns. And the US dollar bull flag is backed up by bear flags on on UUSD. It's backed up a big bear flag on GBP/USD. I'm still taking it seriously. Now, we had obviously a double bottom which broke up and failed back into the lows. This was the original double bottom resistance. But as I said, when we got to the bottom, it could break down further, but we had a larger potential double bottom. That double bottom has now broken up over the resistance, which was at 100.395, and that's broken up with a target in the 104.572 to 105.239 range. And I'm taking that seriously as a target. Now, we do have an RSI 5 sell signal fixed here on the daily, not been doing a great deal, and we've gone up quite a lot since that fixed. That could still play out. We don't have anything on the RSI 14. In terms of the short term on these, this is we've got an unambiguously strong setup for a pullback on US dollar in the short term. We don't have an awful lot on the daily charts here. We don't have any divergence on the USD daily. We don't have any divergence on the GBP USD daily. We don't have any on the yen. We don't have any on the Canadian dollar. On the daily charts, basically, it's a clean sweep. We don't have any divergence here. I'm not seeing anything suggesting that we're going to see a serious change in direction, and I'm not seeing anything really to suggest that this Iran crisis is close to a finish, because actually it doesn't really matter how many bombs that the US Air Force drops on Iran. Iran's a big country. It's an awful lot larger than Israel, which is going to have a lot of trouble if Iran keeps sending missiles at it, because the other thing is that the Iranian missiles are pretty cheap, the drones are pretty cheap, the defense systems against them are very expensive. And when you're when you've got a $100,000 missile which needs to be shot down by $5 million worth of interceptor missiles, and they only make something like 600 of these interceptor missiles a year, they're only really designed for short conflicts. In a longer conflict, you'll start running out of them pretty soon, and the US and Israel are running out of them, and they're already pulling systems from Asia. But the fact is, there aren't actually that many systems that they haven't already pulled out or didn't already have. They're running out of these missiles. They're not going to be able to make more of them soon, and while they could have used the expertise of the Ukrainians here, I think it would probably take 4 or 5 months for that to have a real impact. In the meantime, Iran could do an awful lot of damage. This crisis is very much far from over. And actually, if the dollar is going to go up on this crisis, well, that means that we could go up an awful lot further. Now, in terms of the bigger bull flag here, I want to remind you, the overall bull flag on a break over the flag resistance, which I've got in the 107.5 area, the target would be a retest of 114.78. Now, I'm not saying we'll get there, but I'm thinking that we could have a shot, get up to 105 on this Iran conflict, and then look around and see whether there's any prospect of going higher. But if this flag plays out, the target is a retest of this high here at 114.78, and that can set up a very nice double top for the next move down, which I've been expecting, and we've now broken down from this rising megaphone. This could convert into a pattern and go higher, but I don't think that's likely. I think we're topping out here, but ideally for that top, we would see that retest of 114.78. And with the way the dollar is behaving, if the crisis intensifies, which I think it's probably going to get worse before it gets better, we could see some big moves in the US dollar, and we could see that play out and possibly make this target. So I'll be watching out for that. All right, just having a look at the weekly charts here, we do have a buy signal, weekly RSI 14 buy signal fixed here on the dollar, which I'm watching. That hasn't made target yet, and my feeling is really looking at the Iran crisis. I think the dollar's got, and looking at the way it's been reacting so far, I think the dollar's got further to go. We've got a corresponding sell signal here on USD as well, which is supporting. I'm liking this. The pattern setups are good. I have mentioned that for the move down event, ultimately, while the dollar is going up here, I would like to see this high here on 162 on USD JPY filled. But again, this is topping out for a likely move down. We will see how that goes. All right, great. In that case, let's move on to bonds. Okay, now bonds. I called a head and shoulders here, and I was expecting bonds to go down, and it's now made that target. It made that target on Friday. In terms of ZN here, that doesn't run over the weekend. But I am thinking that that's got a pretty good chance of making target on Monday morning. We'll see how that goes. But I have got a possible 6-minute buy signal brewing. I am wondering about a rally on both of these after what is a successful first move. I'm thinking that bonds may go down an awful lot further, but we haven't yet reached the point where I think it's necessary that move's necessarily going to be starting here. But on the bigger picture, I haven't really got a clear pattern here, but kind of looks, there are aspects of a triangle here without being a full triangle, but where we do have a full triangle is on FVX. We've got a nice looking triangle, broke down slightly below the low here, but heading back, because I think the next move is likely to be back towards this trend line, and ultimately this triangle is a bullish pattern. And if we look over at TNX, we've got the triangle too, and this is a very nice looking triangle. We actually hit that support pretty much exactly and moved up, and we've moved back up about halfway to triangle resistance. I'm thinking we might see a bit of a stall here, but after that I'm thinking it goes up. Now, why am I thinking that? Well, if it's not going to be acting as a flight to safety, and so far it hasn't been acting as a flight to safety, of course this actually there's two things which is in there are two things which are in the bond price, and the first one of those is the is interest rates, relative to normally in normal times, which we're not in at the moment, but in normal times you reckon that the real interest rate is going to be, so you've got the rate of inflation, you've got a real interest rate of, let's say, 1.5 to 2% over that, and at the moment that would give us a yield of about 5% on the chart here, and actually we're at about 5%. So that 50 level is the 5% on the 30-year yield. But you've also got the risk premium. Now the risk premium is significant here, and it's getting significant, more significant. I'm going to be writing a post about this. But the thing is, of course, the Trump, as usual, as he was in his last term, has been spending money like it's going out of fashion. The debt was already very high, and I think a lot of people holding bonds are getting rather uneasy about how high it's getting. And the other thing is that Scott Bessent, the Treasury Secretary, has been placing a huge bet that interest rates are going to be coming down. That bet is because every year you've got a certain amount of 10-year securities, 30-year securities, 5-year securities, which will become due and will be rolled over. Yeah, and obviously you'll sell extra debt if you're running huge deficits, which the US is. Now, that debt, Bessent's not been rolling it over. He's been rolling it over with short-term bonds. So we've now got an unusually very large amount of short-term bonds, which are basically the current interest rates on the short-term rates. But he's not rolled those over because he is betting that if he waits, he'll be able to roll them over into longer-term bonds at a lower price. But the patterns are suggesting exactly the opposite may happen. And actually, of course, just I haven't been talking about these for a while, but this is a potential inverted head and shoulders forming. If we see a sustained break up over 5.2, then this could move things up. This Iran war thing, if it lasts a while and if it goes badly, has the potential to be a significant crisis and cause an economic crisis in the world. That economic crisis would slow down growth, and it would probably send interest rates up. It might well, of course, increase inflation because oil will be up. We might be looking at stagflation, which is a worst case scenario here because growth isn't going up to moderate the increase in the national debt. But the other thing is, of course, inflation is forcing rates up as well. I'm wondering if we're going to see a spike in interest rates, in which case this bet that Scott Bessent is doing at the moment could be a disaster. Because the good thing about locking in your debt for long periods, 30 years, 10 years, etc., as it cushions you against potential increases in interest rates like that one that I'm talking about. And an awful lot of debts would be, an awful lot of the US debts would then be basically running at current interest rates in short-term bonds, and that means that if we were to see a move up to, let's say, 7 to 8%. On interest rates on because these are basically the yields on government bonds. If we were to see that move, then that actually would go straight on the budget. And of course, the interest rate bill for the national debt for the US is currently running at, I think, about 1.1 trillion a year. I wrote a post about it about a year ago. And what I'm saying is that could increase by 400 billion. In addition to everything else, this is what I'm saying is the level of the debt, the overall situation, concerns that the US debt might be becoming out of control. I'm just saying this could create a very nasty scenario. And in a serious crisis, could this go up to 10%? Sure, it could. And actually, it spent long periods above, really this level at 6%. It spent, we spent a decade above it before. More than a decade, thick end of 20 years on here. And what I've also mentioned is that we are most likely in a bull market on bond yields here and in a bear market on bonds. This was one of the biggest bull markets in bonds in history, so it was a bear market on bond yields. And, basically interest rates dropped from 1982 to 2020. And that was a very long bear market during which everyone's really kind of forgotten what the opposite looks like. But when we started this in 2020, and I said if this was the bottom, then I'd be really looking for a bull market in bond yields and a bear market in bonds that would last 10 to 20 years. And we are 6 years in. So it's likely to last a lot longer. Is this a credible target to get within that? Yes, it is. Is Besant making a bet here that could make that an awful lot worse? Yes, he is. We will see. All right, great. In terms of the hourly charts here, nothing really to say. This is a smaller triangle. This is the larger triangle here. But really, we've broken up from the smaller triangle. I'm expecting it to hit the higher triangle. After we've hit the higher triangle, then I'd really be looking for it to. Ultimately, this triangle should break up and deliver a retest this high here at 49.97. FVX, nice triangle too. TLT, this has been a trickier one to assess. Now, this could be an IHS forming, which would be rather bullish. And I have mentioned that this doesn't really fit in with the rest of the bond charts. But I've been looking at this over the weekend and giving this some thought. This could easily be a triangle, in which case, of course, it would be bearish. And this would correspond to the triangle on the yield charts. So I am wondering whether this is a triangle on TLT and that this is on the way down. We will see how that goes. But I was looking at that, and actually I think that might be right. In which case, the IHS, I was very doubtful about playing out to the upside. The triangle, I think, would have a pretty good chance of playing out to the downside. We will see. On the bigger picture, I am wondering, we've got a pretty decent looking trend line here. It's really not bad. So I am wondering in due course, the next obvious trend line target, if we were to go higher, would be to get up into this 95 area, which isn't that far away. But the triangle here could give us, let's say, a retest potentially of this low here in the 74.52 area. And then at that stage, we could see a big rally, maybe break up, or at least try and break up from this double bottom, reach this trend line, and potentially fell downwards. I'm not feeling good about bonds for the next few years. I'm just trying to sketch out how that could look. But in terms of if this is a triangle here, then the low at 74.52 is the one we'd be retesting. That could give us a potential second low of a double bottom if bonds show some signs of life, but very possibly not. We shall see. All right, great. Let's have a look at oil. Okay, oil. Now, this was an interesting one, and partially it's interesting because, just for a technical point of view, just because the heating oil and gasoline, the futures have been rolling over a couple of weeks really before CL in this case, so 10, 12 days. And this is interesting because if you look at the charts here, we're actually not that far away from this big spike high, which was like 120 on or just below on CL. But on HO, it reached just over 4, and we're back at 3.77 here. On RBOB, it reached up into about the 316 area, and we're back up over 3 now. I'm thinking that these all have a chance of being retested. And the one that's furthest away on, and possibly the least likely to get retested, would be CL in the near future. But I'm thinking both HO and RBOB may retest it next week. Now CL, we'd made target on Friday on the HO and RBOB IHSs. CL has now made target as well. Not seeing any strong sign of a reversal here. And I'm wondering if this is going to go up. And if we have a bad week next week, we could retest this high at 120. On the bigger picture, let's have a look at natural gas here. Natural gas, not a lot's happening. We had the IHS break up here. It hasn't failed yet, but it's not delivered. And I'm wondering whether we're actually could be seeing some kind of a bear flag forming here. But I have got something interesting to show you on that. Sorry, I'm just wanting to have a slightly more in-depth look at some of these tonight. And actually, let's have a look at a tale of two energy sources. This is oil. Okay, and now the for once, this administration has done something intelligent, and I'm as astonished as everyone else. But actually, they did something really smart when they released some oil this week from the emergency fund. They said a lot of stupid shit too, but this actually was pretty smart. What they did was that they released a whole load of oil from the emergency reserve now, and they bought in futures. They reached 170 million barrels, and they bought in futures for 200 million barrels. And they did that, and those futures cost a lot less than it would have cost to, let's say, buy the oil now. So right now we've got a spot price of 99.37, and this is in backwardation, which means that it is assumed that in future, the future price of oil is going to be considerably less. Now, if you look forward a year, and we're currently on, obviously, the April contract, that's just about to end. But if we go forward into the April 27 contract, that's at 71.37. So they very cleverly got in and bought back in oil for the to refresh the reserve with slightly more than they're releasing from it in a year at almost the price that they could have bought oil for before this crisis, and that actually was surprisingly clever. They haven't been making that many clever decisions, so I haven't said much nice about them, but that actually was genuinely smart. So, props to them for thinking of that. In G, this is suggesting we're going to see. I mean, obviously we see the usual, and this is very seasonal. We see a sizable increase over the winter, which is then largely given back. But this is not really pricing in at the moment anything from the Iran war. Now, maybe because really you're looking at a separate market in Europe, and maybe there's not really a lot of LNG in this natural gas price. So, but at the moment, it's had very little effect. And really, I'm not sure it's going to have a lot of effect. 25% of the LNG market goes through the Strait of Hormuz. Maybe this will have an impact later, but at the moment, the market is not assuming it's going to. But the market is, of course, assuming that this crisis will pass relatively quickly. It's pricing in really getting back to about $80 within 6 months, and getting back to $70 within a year. That's what the market's pricing in at the moment. I think that might be over optimistic, and obviously if the crisis gets a lot worse, then obviously we could see oil go a lot higher. But let's have a look at the bigger picture chart on oil. Okay. Now, I wasn't sure what the trigger would be, but actually, this is a good illustration of something I was saying on the US dollar chart. While you have a very nice looking pattern set up, I I will always respect that and give that a chance to play out, because an awful lot of the time it's going to, even if it's not clear why it's going to play out. And we had the nice setup here. We had the falling wedge. They broke up. We were forming possible bottoming patterns. I was thinking it might be because of Russia, but it's turned out it was Iran. Now, this has made the first pass of the move. We had the double bottom that broke up here, and sorry, I think I've got them marked up on the weekly chart. You can see the arrow there. We skated past that rapidly, and basically has got back to retest the top of the the double bottom target, and probably on the way back up. So that's made target. And then heating oil, we had a nice looking IHS that made target. In terms of gas oil, we had another decent looking double bottom, and that's made target too. Now, one thing to say here is, now these are all spot prices, and this is what I was saying about the when you roll, when the volume rolls into the next contract, as it did about a week ago on both heating oil and gas oil, then you see the spot price basically move to the forward futures contract. I will reflect that more truly. And one thing you're noticing here is we haven't made, on the May contract, we haven't made the retest of that spike high yet. But here we've gone above it. And actually on heating oil, you can see exactly the same. And this is the effect of the roll. The prices will go up to different amounts on the different contracts. And we've rolled into May here, and that May has given us a higher high and some negative divergence on the spot price, which really is the true price. But I'm getting a bit of a mixed picture here, because of course oil hasn't rolled yet. We haven't retested that high, and we're not close to it either. And actually, because we're in backwardation on here, if we were in May, the price would be lower. So I'm not quite sure what to make of this. I don't have, it looks like negative divergence here, but it's not negative divergence until this higher is retested. But we do actually have potential sell signals forming on the daily charts on both heating oil and gas oil. But the main thing on the bigger picture is, if the situation gets worse, this is very, very easy to read as a bull flag. Overall, the pattern, obviously we had the wedge and we had the double bottom and it broke up and it's made target, but actually on the bigger picture, this may well be a bull flag. If it is a bull flag, then the target is a retest of this high here at 126.42. Now, if we look at heating oil, this is still well short, but this is getting closer. The target would be, the flag target would be a retest of this high here at 4.47, and actually we're over 4 now. Before this, and basically since before this crisis started, if you look back about 3 months ago, because that's when basically the serious talk about Iran started, and the price started moving up from this low, really it's more than doubled. Looking at gas oil, this is further away, but we're still making tracks. I mean, gas was basically at a low a couple of months ago at 1.68 for gasoline futures. I'm pretty sure this is where Trump gets his occasional, oh, I saw gas at 195. I think people have talked to him about the futures price. But, I mean, that's gone up, and basically that's almost doubled. And the flag target would be a retest this high here at 412. If this crisis gets worse, then there's a pretty good chance we're going to reach all of those targets. In terms of natural gas, there's still nothing exciting happening here. I was saying there was nothing exciting happening, and there isn't. We actually had a serious crack at making it to this double bottom target. Since then, we've come down. We're below the monthly middle band. We are staying below the monthly middle band at the moment. And really where, I mean, this is the Iran conflict is basically almost entirely in this one little candle. This is nothing like what we're looking in the oil charts. So far, basically, natural gas, this wouldn't actually, by the standards of natural gas, this has not been a significant move. Look at what it did in the previous 3 months. This is nothing. So it may be that we start getting a crisis on natural gas, possibly, if the Strait of Hormuz is closed for long enough. But so far, it's caused no disruption, and no one's really expecting any disruption. All right, great. Let's move on to precious metals. Now, these haven't done what you normally expect them to in a crisis, but they have done what I've been talking about here. I was talking about this being a likely bear flag on gold, and it's broken down and it's made the target, which is this white line here, which is the retest of this low. Looking at silver, broken down, almost made the target. Looking at palladium, palladium looked as though it might be forming an IHS, but this is broken down and this has retested the low too. Platinum, we have broken down from the head and shoulders, from the bear flag, and made that low too. So all of these have made target. And HG, this isn't a precious metal, but again, this has got a triangle which is broken down. It's got a target to retest this low here, which is a retest of this low at the beginning of February or late January. And we got pretty close to that, and we had a rally, stopped at the monthly pivot, and we're coming back to it. I think that's going to be make target. So we've got two which haven't done the low retest yet, and they are copper and silver, and neither of them is that far away. And I think it's a reasonable expectation that both are going to deliver it. What happens after that? All right, let's have a look at the bigger picture charts. Now, looking at gold, I'm thinking we may well be forming a flag here. Flag or a triangle. Triangle is the more modest option, but even on the triangle option, we could get down to 4,800, possibly as low as 4,700. If this is a flag, we could go down into the 4,100, 4,200 area. I think one way or another, we're looking at a sizable consolidation, and I think it's got further to go. I don't think that necessarily means it has to go down a lot. I don't think it means the bull market on precious metals is over. But what we are seeing is a retracement here. We're seeing a move well below the daily middle band. We're still well above the weekly middle band, but the weekly middle band is basically moving up to join it. This was such a wild move that the longer term moving averages haven't had a chance to catch up. But I think, and by the time they do catch up, I think this will likely be done. But this could well last another 2 or 3 months. Wouldn't be surprised. And ideally, well, my only concern about a triangle is that, normally, classically, you reckon that you don't see a triangle twice in a row, but but actually, we saw a triangle here, and this was obviously a triangle. I'm wondering if we might see another triangle. In which case, I'd be looking really for a move down to between 4,700 and 4,800 area probably, and then some more kicking around for another month or two, and then resume the highs. We shall see. In terms of silver, again, thinking consolidation, thinking that could go lower within this consolidation. We do have an RSI 14 sell signal fixed, and I'm thinking on this move down, we've got a pretty good chance of making that target. We don't have one of those on gold. On palladium, we have an RSI 14 sell signal fixed, and we got a weekly sell signal fixed as well on the RSI 14. Not wild about the way this looks in terms of the I think the RSI 5 sell signals are better, and that one's already reached possible near miss target, but that daily RSI 14 sell signal I think has a very decent shot at making target. Platinum, we've got an RSI 14 sell signal as well. Copper, we have also got an RSI 14 sell signal. I think all of these have a pretty good chance of making target. One thing I'm interested in looking at the GDX chart, we've got weekly sell signals there too, but I'm very interested to see. We've got what appear to be not bad looking double tops on both GDX and GDXJ. Wondering whether these are going to deliver. These could deliver quite sizable moves. The minimum target on a move down below, a strong break below 121 would be a target in about the 90 area on GDXJ. If you have a look at GDX, sustained break below 92.28 would have a minimum target, which would be at about the 70 area. So I am wondering whether these may play out to target while we see the continuing consolidation and retracement in precious metals. But at the moment, this is what I've been looking at and thinking was likely to happen. I was thinking this Iran thing might knock that off course, but so far it hasn't, and it seems to be continuing. So if it's just going to continue as you would expect it to continue, that's what I'm expecting to see. All right, now the other thing I want to talk about. Let's have a look at the other commodities. Oh, by the way, my menu has been messed around this week, which is annoying. It's now over 4 lines rather than 3 lines. So my charts got marginally smaller, and everything's not in the right place anymore. But let's have a look at commodities, because something that hasn't been talked about enough in this Iran crisis at the moment is the fact that an awful lot of the world's fertilizer comes from urea, which goes through the Strait of Hormuz. A very large proportion of what people use as fertilizer. Now, this means that actually we haven't just got an oil crisis here. We've got potentially a food crisis. We've got people who aren't planting because either they think they can't get enough fertilizer, or the fertilizer is too expensive, so it's uneconomic. We could well see this Iran crisis has a real effect within a few months to a year, pushing food prices up considerably. This isn't going to help the popularity of the Trump administration, but also it could affect the prices of quite a few of these commodities. Now, I'm not really expecting to see much. I mean, Casey already had a strong move to the upside, and we've seen a strong retracement from that, but I'm not really seeing anything particularly bullish. SB, bigger picture targets down at 9. We've been seeing a hesitant rally here, but on the bigger picture, not really a lot to sniff about. CC had a wild spike up and has been having a wild spike down, but it's getting back. This is reversion to the mean, getting back into the normal levels. These aren't the ones I'm really interested in, but I am wondering about cotton, on which I have on the bigger picture a beautiful double bottom, or wondering about cotton and wheat and corn and soy. All of these have prospects to go considerably higher. Soy, I don't have a decent pattern for, but I'm going to be talking about the patterns on the others. In the meantime, KC, sell signals reached the possible near miss target. Looks like a bear flag forming. Sugar. Got an IHS which is broken up here with a target and a retest of the December high. Kind of looks like a bull flag forming. Not convinced it's going to make that target. Bigger picture, this is likely still in a downtrend. CC, this has been in a downtrend for quite a while. We're seeing a bit of a rally after this big move down from basically over 6,000 to under 3. We're seeing a bit of a rally here, not seeing a bottoming pattern form here, and this kind of looks like a bear flag forming. Looking at CT, we have seen, we had a double bottom here. That's made target like a champ and is continuing higher at the moment, which is raising my hopes of that double bottom actually delivering. We'll talk more about that. On lumber, we've got a nice looking little double top here, nice looking rising wedge which is breaking down, and we've got a possible weak 6-minute sell signal brewing. I'm thinking we may well retrace 50% of this move up here, and we could just resume the overall downtrend, which would take us lower. ZW, we had an initial spike up on the Iran news, but it hasn't really followed through yet. I'm thinking it might. I've got a double bottom that's broken up with a target in the 624.25 to 626 area. Looking at corn, wondering about a retest of this high. Soy, wondering about, we've already had a retest of this high. Could have a double top here. Maybe. But I'm thinking if the Iran crisis continues, then the prospects for fertilizer may actually keep the prices on all of these up. ZL hasn't retested the high yet and may well. Live cattle and lean hogs, I've rolled both of these over into June. Didn't really change the charts much. But I am wondering about a possible flag here forming on HE. I've talked about it quite a lot of times. I'm wondering about a move down into the 103.75 area to give us a nice looking bull flag. And I'm thinking we might get that, and I'm thinking we might see another leg down on live cattle while that was happening as well. All right, let's have a look at the bigger picture on the commodities. All right, coffee. Coffee, we've seen a nice move down. The initial double top broke down. I've got a larger line marked in here, but this double top is nothing nearly nice as the other, but also it's somewhat oversized. If this was to make target, it would be getting us back down to prices which would be looking improbably low. So if 2.783, let's say it made the full target against 4.4, this would be taking the price down to about 1. That's not a price that's been seen in quite a while, and I'm skeptical about it getting that. Maybe, but at the moment it's not breaking convincingly below the 2.783 level. I'm thinking we'll probably go lower here. I'm not convinced that double top is really valid. I think it looks too large. Coffee, on the daily chart, not really seeing any divergence apart from the weak RSI 5 sell signal, which is fixed and is playing out at the moment. Looking at sugar, bigger picture, we've got a very nice head and shoulders, which is broken down with a target in the 9 area. Maybe this can avoid its fate going down considerably lower, and we do have a possible RSI 5 buy signal brewing on the monthly chart, and these do tend to make targets, so I'm watching that. But if we resume the downtrend, that may never fix. So this is a important time at the moment. On the weekly charts, not an awful lot to see. Not an awful looking falling wedge here, but it's not that great either. On the daily chart, weak RSI 14 buy signal is fixed, getting pretty close to the possible near miss target. Potential bottoming action here. Not really. I think the head and shoulders looks pretty good, and I have no idea how much fertilizer they use making sugar, but I'm not seeing a strong setup for this to go up. Looking at cocoa, we had a wild move up to 13,000, which is basically barely not made it above 4,000, I think, ever before this happened, and it went up, more than tripled that, but then has basically given all of it back and got back to below 3,000. Am I watching this double top? No, and this is a good example of what might happen on the cocoa chart. Sorry, on the coffee chart. This is broken down, but it's showing no sign of making it to the targets, which are at fairly ridiculously low levels. But we've still seen a strong move down. I'm thinking we might see that again further on coffee. Looking at cocoa. Daily chart, we've got a weak RSI 14 buy signal fixed. We've got an RSI 5 buy signal fixed, but that is made target. Wondering about a bottoming pattern forming here if we're going to see a larger rally, which we don't necessarily need to. Looking at cotton, we've got a lovely looking double bottom here, and really this has been lost in space for a while, but it's waking up now. And if this was to deliver, then a sustained break up over 73.71 would have a target, which would be in about the 90 area. That looks doable, and would be a modest rally after this huge decline from the 2022 high. So I'm thinking that might deliver. So this is this action going to continue? I don't know. But we've actually managed to surpass this high here, so this could be the start of a breakout from what has really been a very, very boring few months. Lumber, we've got a lovely looking bear flag here. I really don't think fertilizer is going to have any impact on lumber at all. So, and lumber has been not breaking down from the flag yet, but it's pretty obvious where the flag would go on a breakdown. That's 352.50 here. So that would be, a significant drop of like 40% from current levels. And I think that's got a pretty good chance of playing out over the next year. But this flag, I was thinking this would break down several months ago, and it hasn't done that yet. We've actually got this double top here, which is broken down, and it's nice, but you can see that since that broke down in November, it's been rallying and looks kind of lost in space. We'll see. All right, wheat. Wheat, I was talking about this last year, and what I was saying was that I had a really nice bullish, I was thinking that we might see a really good year this year for corn and wheat, but I couldn't see why that might happen. But now, of course, we've got a reason. This fertilizer problem we've got in the and also compounding the fertilizer problem from Canada. Canada had sort of tariffs slapped on much of their fertilizer. Fertilizer got more scarce and more expensive in the US, particularly, which of course is a big agricultural country. That's likely to feed through sooner or later into crop levels, which of course lower crop levels pushes prices up. Fertilizer problems on the Strait of Hormuz. This of course could push prices up a lot further. As less gets grown, fertilizer is too expensive, then supply gets restricted and prices go up. This has a shot. Now we haven't actually broken up from this double bottom here, the resistance at 617.25, but it's thinking about it. And this actually is a potential setup, which again wouldn't be, I mean, it looks very large relative to where we are now, but this on the bigger picture, this was at 12.84 at the 2022 high. Again, really on a fertilizer problem from Ukraine. And We saw a big spike high. If we were to see this whole setup play out, we'd still only be retracing 61.8% of the decline from there. I think this is potentially doable. We could see a big move up here. On the short term, we got an RSI 14 sell signal fixed on wheat. On corn, again, we got a lovely double top. Double bottom rather. We've got a nice move down from a big high in 22. We have a double bottom setup here. If we see a sustained break up over 504.5, then this could really have legs and take us up to a price which would be in about the 640 area, 635, 640 area. Again, that wouldn't be a wild move. Less than 61.8% of the move down from the 2022 high. That's got a shot. The daily chart, no current divergence. Soybeans, here I don't have. I've still got the big move down from the high in 2022. What I don't have is a bottoming pattern. We are reaching, however, a level where we could have a pullback, maybe form a right shoulder, maybe get an IHS. But at the moment, all we've got is a very, very clear bear flag, which broke up rather than down. And we're pretty much making target on that already. Watching to see whether we get a larger reversal pattern. Because if we don't, then, well, it can go up, but we just won't have a clear target. We shall see. All right, great. Okay, that is the usual stuff done. So let's have a quick look at crypto. All right, looking at crypto, we've got Bitcoin here. Seeing a bit of a rally here. We've now made a couple of higher highs over this initial rally high. This looks like a bear flag. Not sure where the trend line is yet. When we see this high land somewhere, then I'll have another look at that. Still wondering whether we might test this declining resistance here in the 80,000 area. But if we do, that would probably be because we were forming the flag for a couple of months. At least 2 or 3 weeks more. How long can flags take to form? Well, actually, we've got an excellent example right here. This one started forming in the middle of November and broke down towards the end of January. That was 2.5 months. Pretty standard. This was just a bit less than 2 months here for a bull flag. This is a sizable looking pattern. This could last another, probably not more than another 4 weeks. I'd be surprised if it lasted more than that, but it could definitely last that long. In terms of Solana, we're actually making some real progress here, and we've reached this declining resistance trend line. We've reached it before we've reached this resistance here, although I've got that. The main one I'm watching is actually on another chart. I need to just correct slightly where that is, because so that is a little lower there, but we're now reaching the main declining resistance. That is an obvious point of failure. And I would note that we've also got, the trendline resistance here, which I've got slightly above 95. And that hasn't been reached yet, but of course it will need to get through that declining resistance to get there. And I've got something else too. What is it? Hang on. Oh, right, yes, that is. I was looking at the low we made in early 2025, 95.24. So we've got a pretty good level there. And actually, that's a very good match with where we're seeing the this resistance here, which is an almost exactly the same level. I'm thinking that might be hit, and I'm thinking it may well turn there. These, when you get a series of resistance levels in the same area, you have an obvious point of failure, and that is an obvious point of failure. All right, looking at Ethereum. Ethereum looks like a bear flag as well. Nice higher high here. This makes a good standard flag. I haven't got a trend line for it, but it's nice. We shall see. Could we make this declining resistance trend line here? Yes, but the flag would need to last considerably longer. We shall see whether it does. All right, great. In that case, I think that's a wrap. Everyone take care, and I shall catch you guys again on Wednesday. Cheers.